There are 3 simple questions that you need to ask yourself about your retirement portfolio that if you cannot answer a simple and confident yes to each of the 3 questions I'm about to pose to you, then there is a very good chance that your retirement plan will fail. I've been a financial advisor for over 25 years. I've met with over 300 wealthy families throughout my career. That experience and that empirical data set is how I have developed the simple litmus test that I'm about to share with you. The simple test to gauge the likely success or failure of your portfolio strategy is the following. Number 1, do you understand what you own? Number 2, do you know why you own the investments that you own? And number 3, can you confidently give 3 solid reasons on why you expect to make money above inflation on every single investment in your portfolio? It's really that simple. If you can't confidently say yes to each of those 3 basic questions about your retirement portfolio, then you have a problem and there is a lot of room for improvement. If you don't understand what you own, then that means you don't understand how much you can lose. And if you don't know how much you can lose, then there is a very good chance that when the next recession comes, and I'm saying when, not if, when it comes, you might lose a whole lot more money than you ever expected. You are likely to panic and sell out at the bottom, like people have done in every recession. Don't let that happen to you. You should know your investments and understand them like the back of your hand. If you don't know why you own the investments that you own, then there's an excellent chance that your investments are out of alignment with both your return needs, your return expectation, and your risk tolerance. Just because you have a pretty pie chart like we're looking at right here, if you don't understand why you own U.S. high yield bonds, for example, or real estate, or non-U.S. developed stock, or mid-cap growth, or large-cap growth, etc., etc. If you don't know why you have the various pieces of pie in your portfolio, you are at a serious disadvantage. Finally, if you can't give 3 solid reasons on why you expect to make returns over inflation on every piece of the pie in your portfolio, you have a problem. For example, you should be able to articulate 3 excellent, strong reasons on why you expect to make returns above inflation on real estate, or non-U.S. bonds, or U.S. high yield bonds, so on and so forth. Why own something in your portfolio if you don't even know why you're going to make money on it? You should absolutely, emphatically be able to tell somebody why you own every investment, every piece of pie in your pie chart, and why you're going to make money on it above and beyond inflation. To simply and brainlessly asset allocate, like so many people do these days, unfortunately, robo-advisors and financial planners too, to just buy everything, it only ensures mediocrity at best, and it opens up the potential that you could lose a lot more money than you expect. Warren Buffett is well known for investing in simple businesses that he understands. You can apply the same logic to your portfolio and probably improve your results. If you don't understand the investments that you're investing in, or you don't know how they are priced, like fixed income, for example, if you don't understand what duration is, or convexity, or spread risk, and how that impacts the pricing of your investments, you need to learn it. Or at a minimum, you need to have a financial advisor that you really trust who knows what the hell they're doing. Don't assume that your financial advisor is an expert on all the pieces of the pie in your portfolio. Many are not. If you want to have some fun, start asking your financial advisor about the different pieces in your pie chart and have them give you 3 solid reasons on why you are going to make money above inflation on every single piece of the pie in your portfolio. You may be shocked at the answers you get or don't get. For something as serious as your retirement portfolio, it is not acceptable to use a financial planner who merely relies upon software to allocate your investments across various pieces of pie that they themselves don't fully understand, that is a sure sign that your portfolio strategy is on the wrong track. Buying lots of investments that neither you nor your financial planner truly understand, and buying them only because software tells you to in the name of diversification, is an excellent way to be very disappointed when the next recession arrives. It's been 17 years since the last recession. We've had an amazing bull market. But the current environment, it reminds me a lot of what I experienced in the year 2000. Back then, investors were completely unaware of the risks that they were taking. Not all, but a lot of investors. I met so many people who were just convinced that the good times were going to keep going. And they all had pie charts like the one I just showed you and financial plans. Yes, way back then, we had financial planning software even then. And so many people that I met with had financial plans, they had asset allocations, they had portfolios, but they didn't appreciate the risk that they were taking because they didn't understand their portfolios. They didn't know why they owned the investments they had. They just had different colors of pie. And then the crash came. And when the crash came, people panicked and a lot of people sold their investments at the bottom. And it ruined a lot of retirements. I can't tell you how many people I met circa 2003 after the crash who were just devastated. Don't let this happen to you. Now is the time to understand the investments that you have, to revisit your portfolio strategy and make sure that you're prepared should there be a crash in the future or several recessions, a period like 2000 to 2013 or the 1970s. You want to be prepared now so that you won't panic when it happens and you know what to expect. I'm not trying to be a fearmonger. I'm just trying to be an objective realist. All the signs are there that the business cycle is probably going to turn in the not too distant future. Now, I know a lot of you are saying, well, wait, we have AI. AI is going to change the world. And yes, I agree with that. But let's just look at history. All great stock market routes have been preceded by innovation. For example, look at what happened with canal mania in the late 18th century. And then look at what happened with railroads, okay? Or automobiles, or airplanes, or satellites and rockets, or the internet, and now AI. If you look at all those past great innovation eras, they generally coincided with a tremendous amount of startups, new companies forming, speculation in the stock market, excitement, large stock market gains, and then eventually a crash. Isn't that exactly what's happening right now? Look at NVIDIA. Look at the excitement around AI. It reminds me of the year 2000. Now, I know it's not the same, but it is similar. So here we have a lot of excitement, a lot of new company formation, tremendous speculation, a rising stock market. All of the ingredients are there for the business cycle to turn. I wish I knew when that was going to happen. Obviously, I don't. None of us do. But the signs are there that we may be in the twilight of this bull market. Because none of us have a crystal ball, the best thing that you can do is focus on the things that you can control. The price that you pay for investments, your asset allocation, lining up your risk tolerance with your portfolio, making sure that you really understand the potential for losses and gains on your portfolio so that you stay committed to your portfolio strategy and your financial plan. If you have questions about your investments, please give my office a call. We would be happy to give you a second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.